Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing today? Good afternoon, Davey. AAB. I'm glad your long apple short Amazon worked out for you today. Hello, Dimitri. Hello, American. Actually, I have dual citizenship, so there you go. Not just American. So there you go. Hey, Patrick. Good day, Wavy. No, wouldn't really call it a flush out move. It was a choppy day with ended up with a downside bias this afternoon with some momentum. Good evening, Anissa. Good afternoon, Sashi. Let's go. Hey, Dan, how are you doing? All right, let's go. Let's go. Let's go. All right, just a quick recap. We recap while I'm waiting for Bob to jump on. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please, please, please leave some comments and like the videos. So that's where we stand. Let me get to just the mic button while we're waiting for Bob. Squeezed out one good futures trade today. Sometimes that's all you need. And if there isn't a trade, you sit on. There was a couple good trades in my book. There was two really good ones. I'll go over them. You know the one, Sterling. Bob, Jim thinks the Fed will pivot in September. Do you guys share this view? You guys make a great couple. Oh boy. Yeah, Jim, I saw that Jim Iorio just posted that on his Twitter feed. He thinks a Fed will pivot in September West, Bob, once he gets on here. I don't think it's a pivot in September. I'm leading later than September. I don't think they're going to pivot early and risk a rebound of inflation. So let's see here. By the way, economic optimism up a little from prior, but that's still in the dumpster. Inflation expectations higher than previous, so inflation in the consumer mind is remaining entrenched. And then we had Barkin speaking today. By the way, AP oil stock change just came out. That's higher than expected. Pretty mixed. Apple up slightly. That's what you're talking about. AB. Amazon down. Microsoft finally got the hit that I was looking for yesterday. Oil pulling back nicely. We had a big dump move. If you wanted a dump move, it was in oil. FOMC still favoring that 75 basis point and still in negative gamma territory. Earnings, nothing much after the close today, but tomorrow we got Delta, which will be interesting, and Fastenal. I think I said that right. Fastenal company. There's a interesting setup on there. Let me just jump to that while we're waiting for Bob, because just take a look at this. Did I get nice little potential double? That doesn't mean it has to trigger with cycles rolling over, but I will be keeping an eye because look where that 50 is. So that could be an interesting little setup play tomorrow. But remember, with a gap down, it would turn into a triple bottom, and I have no insight on their earnings. So let's see. Now I got to jump back. Jump back. Get back. Get back to where you once belonged. All right, Bob. Bob, you were joining to avoid me singing, weren't you?
I was joining late to avoid you singing. I had a feeling you were going to sing today.
You did?
Yeah, I had a strong feeling.
Yeah, well, we now have to jump back because you're on here. So now my whole plan is messed up.
Why? What happened?
I don't know. Just thought I'd say that. Is that just a plain t-shirt today?
Yeah, it's plain black today.
Plain black.
Lighthouse.
Kalani, Jim thinks the Fed will pivot in September. You saw Jim Iorio's tweet a little bit ago. Do you guys share this view? You guys make a great couple.
Well, I'm kind of cheating on Mike. Mike's my work wife.
Well, I'm not even going to go there with the comments, so let's just move on. So, do you think the Fed's going to pivot in September or you later? I'm in the boat as later.
Go ahead, Mike.
What was that?
Are you asking me, or were you starting to answer and I interrupted?
No, I am in the boat. They pivot after September. They pivot closer to the end of the year or beginning of next year. What is your pivot point?
I'm in the boat of saying they don't pivot based on asset prices. Like I'm not really picking. I think Jim's incorrect for picking a time frame of when they pivot. because I don't think they'll pivot as long as inflation has a 5 number on it. I think we can get down to low fours, high threes. They may pivot unless assets are holding in. Other than that, I actually don't think they pivot at all. I mean, I think they have to send a signal that there's a pivot somewhere in the future, and they haven't even come close to doing that yet. Like, not even close. Even Bullard today, and Bullard's been, I don't want to say that Bullard has been right. Bullard has been the one that has been consistent with what's actually happened. And I'm talking about Fed policy, not economics. Bullard today said that the economy is strong enough to withstand a series of hikes. He doesn't think that the Fed's going to throw the economy into recession. Again, I'm not saying Bullard has been right about any of the predictions economically, but he was the one who was saying for a while the Fed needs to get aggressive, the Fed needs to get aggressive, and then they did. And now he's saying they need to fight inflation. We're obviously going to get the numbers tomorrow to see if they've gotten anywhere. But then, as I've talked about multiple times, not just here, but in the podcast, we're now seeing services inflation, which is based on wage increases, which has not eased yet. So I think the numbers are going to be high for a while, even if they come off a little bit. You know, we have to have month over month inflation at about 0.25% for multiple months just to get year over year down below 4. So I think that's going to be hard. So I think picking September, I mean, man, it's July. That's 2 months from now. So to say they're going to pivot to me means they're going to ease, or they're talking about easier monetary policy.
Oh,
So I don't
see,
think that happens in
me,
September.
me, I put in the pivot camp that we're done hiking and we're gonna do a wait and see, and we're we're
Yeah, I mean, I know that that's what you think. I don't. I think, and I think Jim thinks the same thing, to be honest. But to me, that's not a pivot. Like Jerome Powell actually went from calling inflation transitory to calling it sustainable, and we need to do 75 basis points. That's a pivot, right? Because the Fed went from going from easy monetary policy to tight or tightening, as opposed to neutral. I think September, October, November, that could be a very opportune time for the Fed to say, okay, we're gonna pause now. To me, that's not a pivot, right? If you're driving north and you want to pivot, you got to be driving south. Doesn't mean you stop at a red light. That's not a pivot.
that'd be a U-turn.
A U-turn is quite the pivot.
Hey George, how are you doing? Josh, hello. Early thoughts on CPI tomorrow?
I'm kind of giving up on that. I think you could see a 9 handle on the year over year, but I think the month over month will be a little bit light. Um, I'm talking about the headline, by the way. The inflation year over year, I think, might see a 9.1. Month over month is probably the one we need to start watching because we obviously already know that the year over year is pretty high. I'm looking at it over here. Month over month is expected at 1.1 on the headline. I could see that being lighter, and I could see the core being at 0.5, but I think the year over year could have a 9 handle on it.
That'll be interesting. That's at 7:30
Yeah.
Central Time. So
Now
that's
I've got a
gonna.
really packed morning, but I'll probably come on here for a couple minutes after. I've got a TV spot at 8:30. Wait, that's what time the number comes out. 8:30
No,
Eastern.
well, yeah, but you're on your Eastern time. I'm talking Central Time. So you
Yeah.
have a TV spot at
So
7:30 Central.
yeah, I got a TV spot. It's a TD Ameritrade spot at 7:30 Central, and then I've got a call. I do the Ninja Trader webinar at 10:30 Eastern, so 9:30 Central tomorrow. Um, so I think I can come on for your open thing if I can get my CME video done. That some of you guys are nice enough to retweet out when CME puts it up.
Hey Bob, what did you explain the earlier tweet about tacos and commodities?
I just put out kind of every once in a while, put out a veiled political tweet. Sometimes I put them out unveiled, but this one was veiled. I just put markets are like tacos or like pasta, and I
Oh,
just left it at that.
okay. I remember.
Yeah,
I put out the that headline
yeah,
tweet. That was.
yeah. And
I'm
so
sorry.
after I put the tweet out, about markets being like tacos or pasta. I wanted to make sure I wasn't nobody in the Hispanic or Latin community thought I was making fun of them. I put out pasta on there as well because I was making fun of Jill Biden. I wasn't making fun of any community. And then Sterling said, "Do you want to clarify this a little bit?" He tweeted back to me, "Do you want to clarify this a little bit?" And I said, "Ask me in the live stream." And then Mike, you tweeted out the story, and I retweeted it, tagging Sterling in it so he could see it.
Yeah, that was the
It
that
was
was
so ridiculous.
that was this one. I love that
That was
headline.
that's ridiculous in the context of the world that we live in right now.
That's why I just
I
that,
don't think she meant to be offensive at all. I really don't.
I'm sorry, that headline
I
is
don't
just
think she.
like,
I don't think she meant to be offensive. There's a place in Naples, if you're ever down in the Naples area, Naples, Florida, called Taqueria San Julian, and they've got 20 kinds of tacos on there. One's better than the other. They're ridiculous. And she's just trying to say the assortment of different taco. I don't think she was trying to be offensive, but it was a very East Coast white kind of a comment, you know. I mean, she could have picked anything. She's from the East Coast. She could have said it's like the different kinds of oysters.
yeah.
You know, it would have been
No,
better.
I understand. I just thought that it actually, I was commenting more on the headline that that's the state of the world we're in, where that is the
Yeah,
headline that,
yeah,
because they could have worded that
yeah.
headline completely differently.
They could have
You know,
absolutely.
and I almost fell out of my chair when I saw that. Let's
So
see.
funny.
So that covers tacos and pasta and commodities and everything. Would a strong dollar force the Fed's hands? We already have a super
So
strong dollar.
that's a great question. I would say that it might if the strong dollar continues, I should say, continues to affect emerging markets the way it has, and it gets really, really bad. You could see that happen, but I still think the Fed, you know, Jim Bianco said it in our podcast, and I don't necessarily agree with the exact thing that he said. He said President Biden gave an order to the Fed to stop inflation. I don't know that that's what happened, unless Biden actually said, "Hey, stop inflation or you're fired. I'll replace you." I don't. You know, he's got a 10-year term theoretically. He can be fired, but um, so I suspect that that's not exactly the way the conversation went, but it could really, really, really be um, the kind of thing that crushes emerging markets so bad that they could come to the U.S. and say, "Hey, can you guys try and calm down a little bit?" So I think it's possible. Hawaii, Kalan, Hawaii.
It's
How do you
Kalani,
say that?
Kalani, Hawaii, living in Hawaii. He gets up
Yeah,
Sunday
Kalani,
morning
Hawaii.
live stream.
I think it's actually a great question. I just don't know what level that would be. You know, right now, a lot of the strong dollar is more based on the weak euro than it is the strong dollar. So keep that in mind. Although we did see, I don't have a final tally on it. Let's see if I can get a final tally on it. Um, through the month of July, the 3 month yield is up about 45 basis points. That's a gargantuan move for a 3 month T bill. It's like 45 basis points in the month of July. That tells you that there is absolutely no intent, at least on the short end of the market, that the Fed's going to calm down at all.
Uh, yeah, Coco's Germany CPI tomorrow too. And let me know if I don't see it mentioned it in the live stream tomorrow morning. Coco, let me know how that comes in and what the direction is over there. George, Bob,
Also, we got to make a Canada rate decision tomorrow too.
well, the Fed fights inflation. We have Biden sending money, weapons, prolonging the war in Ukraine. Isn't it impossible for Powell, since the war will go on indefinitely, as no one is de-escalating it?
Powell has control over, and I don't even know if the control is the right word, influence over the money supply. And you're not wrong. I mean, a lot of what's going on, the Fed has had nothing to do with. A lot of what's going on, the Fed has had everything to do with. I mean, if for years, central banks kind of hinted to Congress and the president that, like, we're doing what we can, but we need some fiscal help. right? There's monetary policy, which is the Fed. There's fiscal policy, which is Congress and the executive branch, right? They decide how the government spends their money. And for years, you could go back and watch Bernanke and Yellen all saying, there should be some fiscal help. And what they meant was infrastructure programs to create jobs and put some spending in place and put some dollars into the economy, other than the Fed trying to do it by printing money. And they never did it. And then during the pandemic, they did too much of it. So that money is starting to get drained now. The savings rate has been falling. The total number of American savings has been dropping. Credit card balances, right, Mike, have been going up.
Mm-hmm.
So I'm not sure how much of that, George, that the war has to do with. I mean, we're sending money over there, but it's not necessarily velocity of money that's coming back into the price structure of the U.S. Yes, it's affecting certain areas, certain very important areas like food and energy. But I don't know how much worse it can get. So I guess what I'm trying to say is I don't know, but it's certainly not something I'm looking at. I'm not looking at the war in Ukraine to end to help the price structure here in the U.S.
Well, George also follows up with commodities have come down, and that could lower inflation a while. But once the lower farmers' harvest comes in from fertilizer shortages, inflation could sustain. That could sustain inflation through 2023.
Well, here's the thing, George. It's George, right?
Mm-hmm.
Geo is George.
Mm-hmm.
Since the high on March 7th, copper's fallen 35%. So commodity prices are already coming down, right? And you look at the same thing with aluminum. You look at lumber. Okay, lumber prices have dropped dramatically. Housing prices are starting to come down, and the war is still going on. So, yes, it absolutely has something to do with it, but it's not in like my top three things that is going to prolong inflation. It's really demand destruction, commodity prices, as you mentioned, which are already coming down, and then all by itself, energy. Now, energy can certainly be affected by the war, so you're not wrong.
I am keeping an eye on the Goldman Sachs Commodity Index. We're against the 200, forming a potential double. So I am keeping an eye on that. Long way out from triggering, but I am keeping an eye on that in case it does pop back up. Just wanted to throw that out there. Hey, Lauren. Let's see. Bob, rising interest rates will really stop inflation?
Well, it can't stop it in and of itself, but Coco, in the past, rising interest rates have slowed demand. Remember, it's not a direct effect on price. Everything is trickle down. There were years and years and years where everybody made fun of the trickle down economy, but they're willing to do a trickle down, trickle up slowdown, right? So if you think about it, let's just do a very simple domino effect, Coco. Interest rates rise, people buy fewer houses, so they have fewer houses to rehab, so they buy less sheetrock and washing machines and dishwashers from Home Depot. So Home Depot needs fewer supplies. So the suppliers have more stock. So they start to discount things. That whole domino effect started with interest rates being higher. Okay. Same thing with like car loans. Interest rates go up, the demand for cars goes down. Auto parts companies become much more attractive stocks. Of course, if the price action is right. And people buy fewer and fewer new cars because interest rates have gone up. There's less and less 0% financing out there. So interest rates can slow demand, but to say that raising interest rates will stop inflation is like saying an umbrella will stop the rain. Umbrella won't stop the rain, but it might stop you from getting wet. I don't think that works, but you get the gist. I don't really think that one works.
Yeah.
But
no, the umbrella can't stop the rain, but it stops you from getting wet. Now that's that can be used.
That is a very true statement.
Yes, and that can be used. I don't know how much it applies to this.
I don't think it applies at all to what Coco was asking, but I think I made my point. Quick, my philosophy teacher years ago, I was always argumentative. I don't know if you know that about me, Michael. very, very prone to debate and argue. And my philosophy teacher once stood up and said, there are statements that are always true. And I said, I don't think a statement can always be true. And she was a little 5 foot, 4 foot 10 inch former nun, real little lady, little glasses. And she goes, it's either raining or it's not raining. And I'm so proud of myself. And I jumped up and I said, what if it's snowing? She goes, then it's not raining. Oh, that was fantastic. Anyway.
It's just very cold rain. It's frozen rain.
Rain.
It's frozen rain. It's still technical. But can it
That is a true story.
S&P has made lower highs since June 26th and higher lows since June 16th. It's coiling up for a big move, yes. The question is which direction?
I still think down, but we'll see.
I mean,
Could be wrong.
The long-term trend, and even on a pop-up, we could get another long-term. Again, you have to separate your time frames. You could even break up in the short term and then roll over in the long term again. Long term, there's still nothing changed. William will look at JP Morgan once Bob's done. Our auto loan interest rates at the dealership level have gone up almost 100% in the last 8 months.
Yep.
Wow.
That'll slow demand. So that's to Coco's question.
All right, look, Nicholas, welcome. Hi, Mike and Bob. Finally catching one of these sessions live. Been learning a lot from both of you over the past few months. Well, thank you for being here. Glad you could catch one live.
Good to see you here, buddy.
Mike makes everyone wet, even if you have an umbrella. What does that?
I'm not sure you worded that correctly.
That does not sound right. Hey, Waka. Let's see. There you go. Freezing rain. And Raj. Hey, welcome, Raj. How long will it take to reach the 2% target? How long do you think it'll take to reach 2%?
I would say mid 2024 to 2025 earliest.
Oh, no.
I mean, look, you just look at how fast we went up. If you want to find a 3% or lower year over year, you have to go back slightly over a year. So I would say it would take at least a year, and you're going to need, I mean, remember, these are increases in inflation, right? So if you go to the St. Louis Fed's website, which is FRED, right, FRED, and you type in CPI index, they give you an index, which is a number. Okay, it's not a plus 3%, plus 5%, minus 2%. It's a number. And that number always rises, right? That's why the Fed never says, we're trying to keep prices flat. They say we try to keep it stable at a 2% increase because they always rise. It's risen forever, basically, other than a couple of little blips, the pandemic being one of them. But at some point, you can easily see a monthly number of down 6%. Okay. And then a year from then, if you get another down 6%, well, then year over year is zero. Right. So it's very easy to look at those numbers in a skewed way. So all we need is a couple of months of, say, 2/10 month over month. And then you start looking at the year-over-year comparisons, and they drop off a cliff. But it certainly doesn't mean that inflation is stable at 2%. Does that make sense?
Waka. Bob, question: Would you not? No. Would you not? Oh boy. Would you now?
Would you know why the CPI
estimate is much higher than all others?
Well, I think it's based on, so remember, this is last month, right? Just think of where fuel prices were, some of the commodity prices. When I said that copper had fallen, I lost my copper chart. When I said that copper had fallen 34% since the highs, when were those highs? About a month ago. So these are last month's figures, right? So a lot of stuff was elevated then. So people look at last month's numbers and they look at what William just said. I just got distracted.
I know.
My last month's numbers. You look at last month's numbers and everything was elevated. So we all tend to look at the most recent data and say, well, that doesn't really make sense. Things are lower, but you got to keep in mind these are last month's numbers. I'm pulling out my copper chart again, and that high was March. So if you look at where it was in say mid-June, copper in mid-June was about, well, let's say the beginning of June was about 27% higher than it is now.
Let's, let's measure it out real quick. From June, let's go from near the highs in June to now. It's down close to 29%.
All right. It's about 29% higher. So anyway.
India is ditching the dollar for exports. That won't help it. India is
Yeah.
ditching.
I'm not
I
sure how
saw
to read
that.
that, honestly.
Uh, Thank you for being here. How, Anissa, how weaker do you think the euro will become compared to the US dollar?
I think we're going to see a 98 handle, but Anissa, be really careful when we hit parity because there's a
We
lot
hit
of
parity today.
short-term traders. Did we hit 100 or do we hit? I know we were at 130.
No,
1.0030
we hit
is what we saw. What was the low?
1.00 here on. Well, I went over that this morning. We hit the low was 1.000000000000.
Okay. So we hit parity. I would suspect we'd get a small bounce there because a lot of times speculative trades, especially in FX, will bounce off those.
Mm-hmm.
When you talk about a level like crazy like that, you'll get speculators that'll cover at that level. Okay, we hit it. That's it. Move's
Yep.
done. But it's not always done. Um,
No, that was
if
the.
you look at it from a perspective, yeah, I think we're going to get down to 98 and change
Well, the next
on the Euro
major
USD.
harmonic is 98, pretty much 98.70.
All right, so I'll call that my change then. 98 and change is 98.70. That's what I'll call it. I'll say 98.75, so I'm closer to being right.
And where would that just, let's see, I'm just looking to see where the next 90, the
By
breakout
the way,
point.
Anissa, thanks for all your support. Anissa is extremely supportive.
Uh,
So
Bob,
sterling, by the
what
way.
are your thoughts on generally on banks? Interest rates up, good for banks, right?
Well, no. Um, the yield curve has to steepen. That's good for banks. So if interest rates are higher and the yield curve is steepening, that's good for banks. Without going into the whole explanation of the technical side of lending for banks, banks borrow short and lend long. What does that mean? Well, they borrow overnight. Okay, they borrow at overnight rates or at 2 year, 1 year rates from the Fed, and then they lend for 10, 15, 30 years. So they borrow short term and they lend out long term. Okay. When the curve is inverted, they lose money on that. So right now, actually, I shouldn't say right now, as of a little earlier this afternoon, the 2 year, 10 year yield spread was inverted by around 10, 12 basis points. I'm not sure
Yeah,
where it ended up.
it ended up
Uh,
around minus 7 basis points, but yeah, earlier it was down to uh, under 12 basis points.
Okay, so in theory, this doesn't happen exactly the way I'm describing it. But in theory, they'd be borrowing money for 2 years at a higher interest rate, so lending it out for 10 year at a lower interest rate. So they lose money in that. Now, that's not what happens. It's not the 2 year, 10 year that they borrow and lend at generally. Okay, but the steeper the yield curve, the more money banks are making. The flatter or inverted yield curve hurts banks. And guess what else it does? To Coco's question earlier, it slows lending. They don't want to lend, right? Because they don't want to borrow. They worry about the short end going higher and their loan is already out at different interest rates. So they worry about that. So they are a lot more tight on their lending, hence the tightening of monetary policy, right? That's what tightening means.
Sterling asks, why can't the Fed just go ahead and raise rates up to 3 to 3.5 level by the end of the year instead of this nagging, drawn out rate increases?
I think they worry about shocks to the system with that, Sterling. I was shocked at 75 basis points. but I think they worry about shocks to the financial systems. There's a lot of adjustable rate loans out there on the short end, especially in corporate America, especially in small to medium sized businesses that may have a revolving line of credit with a, an adjustable rate on it. A lot of companies, their accounts receivables are 60 days, but they pay their employees every 2 weeks. They need to pay their suppliers every 30 days. So they have revolving lines of credits. They pay out and then they take their money in and they pay the loan off, and then they pay out and they take their money in and pay the loan off. If you just shot interest rates up to 3.5%, that actually could fuel a short-term blast of inflation as companies jack up their prices, trying to make sure they can fund their revolving lines of credit. So that's why I was very surprised at 75 basis points. But again, according to St. Louis Fed President James Bullard, the economy can handle less, 75.
Would you now know what will happen to banks and consumer staples if CPI remains high?
Well, I think consumer staples will do well because they're staples. So consumer discretionary should suffer a little bit because when you only have a certain amount of money to spend, you spend it on staples. And if the price of everything is going up, you buy toilet paper and milk and ass wash or whatever else you buy that's a must. And you don't buy watches and purses, and Mike doesn't buy any purses, stuff like that. So you don't buy the luxury goods.
I do not
Now
buy any purses.
Banks is yield curve and the level of yields. So,
Lauren, I was wondering, Wood is saying some wacky stuff. Then I saw says Roku could gain 600%. Now I know which Wood you were talking about.
yeah, that's easy now. Good old Captain.
Once she's not on TV anymore, we'll be much closer to a bottom. As long as she.
By the way, when she's not in the news, she says crazy shit.
That's just insane.
Roku. Yeah, when she's not in the news, all of a sudden she says crazy stuff.
Hey, Laura, why would Roku? They're essentially a hardware company that makes a little streamer box without any. Is there something I'm missing that they have some specific niche that we all have to go get a Roku tomorrow? Dang, did they just publish the lawsuit? Twitter sues the force Musk finish the buyout. Let's see.
How do you force somebody to pay the money?
Market will rally before inflation reaches 2%. We'll have multiple rallies in the sell-offs. You don't just go straight down. You don't just go straight up. But in this environment, we will have rallies before we hit 2% inflation. We could theoretically get a rally tomorrow. Like George did analysis set CPI target high for tomorrow, knowing prices came down to set up a beat of expectations.
Well, it's not. Let's say you rally. Let's
say you rally tomorrow.
That's not. And? That's not how those expectations are set. We should clarify that. When Mike puts up the economic calendar, that's a survey of economists and analysts. They theoretically, Mike knows better than anybody how the statistics work, but they poll a bunch of people and they throw out the high, throw out the low, and they take a mean or a median. I'm not sure which one they do. But this is an estimate from analysts and economists. It's not somebody sets it.
Well, I think just with all that White House talk, they're saying inflation's going to come in really hot. That's separate from the analysts, but they're setting expectations that, look, let's say what set year over year, let's say 8.8. Let's say it comes in at 8.9, not that 9 handle. Could the market theoretically rally? Yeah, because that's what the market can do. But does that mean the bottom's in and we should all just go and buy everything with our money? No, because we don't have long-term signals. Long-term signals are still pointed down.
Yep.
Let's see. Hey, Amit. Dimitri. Today I finally made my first income as a trader. I sold my laptop. That was actually funny. Hey, Christoph, joining late. How much lag do you expect there will be till falling commodity prices affect inflation? Lag time?
Say that again. I'm sorry. I was
How
responding
much
to an important
lag do you
text.
expect there will be till falling commodities prices affect inflation? It's sort of what you talked about earlier, but I think
Yeah.
it's
I mean, we have to see month over month be at 2%, 0.2% for probably 4 or 5 cycles of the CPI figure. And it's not necessarily about commodities collapsing. Like we talked about copper collapsing. If copper rallies back up, we're not getting that. So it's about the sustainability of these drops. It's not about these dramatic drops. These dramatic drops are going to be one-off things. Again, remember what year over year inflation is. I'm going to pull something up for a second, real quick. If you guys ever want to look at stuff, investing.com is a really good source because they post a lot of stuff for free and you can go back, right? Just go back and look at this stuff. There's no analysis, but you can like type in investing.com year over year CPI. And if I want, I can hit this drop down arrow and I can look at dozens and dozens of rows. So if I'm looking at the year over year CPI, February of 2021, it was 1.4%. Okay. Now, a year ago, this is the June figure released in July, it was 5.4%. Okay. So year over year CPI, what was it versus the prior year? Okay. So just think about that math. If last June or released in July, June figure was 5.4%, right? And they're predicting 9.1 now. Okay, that's year over year. That's the index of where it was versus the index of where it is now. That's not 5.4. It's not from where the 5.4 to whatever percentage is this month. It's the change in the index. Okay. So you have to have month over month changes be very flat in order for a year over year change to drop dramatically. We haven't had that yet. That's why last month's CPI, I think it was 0.6 month over month, and it was expected at 0.3, completely blew a big year over year change out of the water for this set of data because you needed to be low consistently. There was a 0.3 in there, and then there was a 0.6. Does that make sense? Mike, if it doesn't make sense to you, then I'm not doing it
it
right.
makes sense.
All right, so if you look at now the month over month, and you go back the last time in the month over month that we had a 0.3 was September of 2021. And then it went 0.4, 0.9, 0.6, no, that's 0.8, 0.4, 0.9, 0.8, 0.5, 0.6, 0.8, 1.2. Then we had a 0.3, so there's our little dribble. And then last month was revised to 1.0. Okay, so that's another spike. So now we need another dribble, and we need a couple more dribbles in a row for a year over year number to come out low. And it's that 1.0 that made analysts and economists predict an 8.8 to a 9.1. That's about the range of those center readings. It's 8.8 to 9.1. I'm in the 9.1 camp. I might have over-explained.
Sterling asks, how's the liquidity in the bond markets right now?
Liquidity's great. There's no problem with bond liquidity right now.
Nope.
Credit markets aren't
Credit markets
holding
are
up that well still, but
tightening.
yeah, those are tight.
But bond markets, I've not seen anything, and I'm not.
Mhm.
But nobody asked me. George, thanks for doing so much for the both of you. Raj, it's not the commodity prices; it's suppliers and vendors reducing prices. Why would they have cut? Consumers are still paying more. Hence, you need demand destruction from consumers. It's auction market.
Well, that's what the Fed's trying. Well, that's what the Fed's trying to achieve, Raj. I mean, think about it. Like consumers are paying, right? But the second that their car loan payment goes up, or their adjustable rate mortgage kicks in, or their credit card interest rate goes up, they will theoretically not continue to buy, right? So that's sort of where it is about commodity prices, because if commodity prices continue to fall, okay, that will actually affect how much money consumers have and potentially could keep them buying, right? So if commodity prices keep falling, they're able to go to, if commodity prices fall, if lumber prices fall, okay, then the price to build a new house falls. So despite rising interest rates, builders, this is all, I'm pulling these numbers out of my ass, but imagine if a builder can reduce the price of a new home enough so that the monthly payment is still where it was 6 months ago, even with the higher interest rates, that won't slow demand. So commodity prices are a big part of it.
Amit, we had that conversation the whole beginning of the stream. So go back and rewatch. We're not going to rehash.
Yeah.
We had that.
Sorry, Emmett.
It's
Mike needs time to go over the requests. So
it's interesting that the last commodity rally in 2010-12, which was similar in size for ags and energy, didn't cause much inflation at all. When will we see negative oil prices again? I don't. I don't.
I don't. I mean,
know if they're.
I don't know that you will, given energy policy here. I don't know that you will.
What are your thoughts on Amazon as Prime Day today and tomorrow?
So it seems like sales are doing well. The Amazon Prime Day sales are doing well, but I think that kind of tells you how badly people are looking for sales.
I know I picked up a couple things that were on deep discount that I was waiting for, and I'm like, oh, this is too good. So, hey, there's a time. I'm waiting for deep discounts, and got some couple deep discounts. And no, I did not buy a Roku, so Roku's not going up 600%.
Just looking back, hang on, Mike. Just looking back 2010 to 2012. That's the dates that Christoph put out, 2010 to 12. So in 2009, inflation was negative 1.3%. By 2012, year over year was 3.9. So it actually did cause inflation. And just declined after that. If you even go to just like, God, I can't see this. There's no way to expand this for me, is it? All right. I'm not gonna be in front of the camera when I put these on, but I'm gonna put them on for a second. Let's see. This is January 7th of 2010. Year-over-year inflation 1.10. Okay. By January 10th of 2011, year-over-year inflation 3.9%. So don't think that it didn't cause inflation. It may not have caused much because the rest of the market might not have reacted. And also, we were in a time of continued easy interest rate policy in that point. So we didn't have the Fed piling on to higher commodity prices with higher interest rates.
Bob, those were nice glasses, by the way. They couldn't see you, but I could.
These are dollar store.
Dollar store.
Yeah.
Look at those. Look at that. Retail Me Not said the average order volume on Amazon was 385 versus 550 or so. So that is down. Is that what you're saying, Raj?
All the analysts I saw said it was going good, but that could be true, Raj. I don't know. That could be spin when they say it's going good. I don't know.
I guess we'll get the final figures when we see it. I mean, I didn't.
We'll find out.
Enough. I only bought 2 items. 2. So yeah, yep. So you're saying that Retail Me Not says the order volume is down. Is that compared to last year? The Fed didn't pump $3 trillion into the market in 2010 to 2012. They were pumping.
They were still pumping money in.
They were pumping then. I mean,
now I got to look something else up.
You guys, The problem is this live stream's getting so successful. We get comments all the time from smart people.
2010, 2012. I'm looking at the Fed's balance sheet. Why? What couldn't they couldn't give me a bigger image of this? Here we go. 2010 Fed's balance sheet. 1.1 trillion. 2012. 1.7 trillion. So 600 billion. Not bad.
When you throw out stuff like that, 600 billion, not bad compared to like the trillions
They were
recently.
very responsible at that time.
That was responsible. It was only 600 billion compared to let's just pump it with
Only
trillions.
600 billion.
All right. So I'm just peeking at Amazon stock. Anything else you wanted to talk about before I'm going to wrap this up with you and take a quick look at some markets because I actually have to do some stuff.
No, I'm good. Like I said, Mike, text me after tomorrow so that I'll forget.
All right. So that's where
we'll. All right, I'll theoretically see you guys in the morning. Ian.
All right. Thank you for being here, Bob.
See ya.
Come on. There we go. Small little Mike again. All right. Great questions today. Great Q&A session with Bob. Remember, for anybody new, Bob is on Tuesdays and Thursdays and occasionally pops on in the morning. So let's just take a quick look. I know we had again, don't force trades when they aren't there. We had, it looked like a couple buy programs right off the top, and we were in a choppy day until we broke down this afternoon. But there, I know Sterling posted this little double. There's this little fantastic double that hit on the S&P. That was one of the fantastic trades today. And then it just stalls out at that first target. See, really nice there. So that was fantastic. The other fantastic trade that based off of these, went the wrong one. Based off of this, when we broke out, after lunch with some momentum closing below the 62.5, this is where that statistical play comes in. So breaking below this early morning support before the breakout play, retested after the sharp reversal, forming that double. The close below that and below the 62.5 from this whole run-up move, and this is why I want you to try to learn to pay attention to this. You get the close below that with some breakout momentum after lunch, and statistically, what should we go do? We should go target this 87.5 to the full retracement area. And look at this. Down, down, and then it gave you a pausing bar right here, which was fantastic. So that can either be take something off the table or very aggressively move down the stops. I use this as the pausing bar from the highs in the morning, okay, with your harmonics. So see the highs in the morning, 835, after this little momentum breakout, to the pausing bar to see where could we end up the day. 38.12, next minor level, major level 38.05. So that was the little short continuation trade, and then a little bounce going into the close and then flatlining. So those were the fantastic couple things today. Other than that, it was just a choppy, horrible mess. But that's where you got to learn. You don't have to especially in markets like this, you wait for the setups. If there aren't any, if there was not going to be a setup today, then you sit on your hands. And depending on whether you're trading a stock or stocks or you're trading futures or whatever, if there's no good play, you don't have any. I try to teach some of these stuff to show you to maybe you can start drawing them levels on your charts and learn to spot some of these plays yourself. All right, and test them out for yourself. But that's how we got the harmonic levels. That's how we got the retracement harmonics and the breakdown play. So Where do we sit? The dip back below 38.17 overnight, then I'd be watching for about 37.95 to 3800. I don't, unless something really interesting happens in Europe, I'm not expecting a ton. We got the German inflation, so that's going to be the first potential trigger. But other than that, it's a lot of stuff's going to be waiting on that inflation figure tomorrow. So do keep that in mind. On a bounce play going into overnight, I'm now watching about this prior key. You see this key resistance harmonic, and then it tested a little bit here, broke down here, but I'm watching about 38, and that's a 50% harmonic from the major lows to these highs. So I'll be keying off of that again. So a rally target for me would be 38.47, 38.50. And then your next major level is 38.72 in case you need something for tomorrow morning if we're staying in this range. And your major support level would be about 37.70. Other than that, just going to wait for the European price action to unfold. The NASDAQ, again, we got that little, we had this bigger double top. We had this little spike up move and then retesting the lower prices, bouncing in. That's why I left these levels on. So still my rollover play tonight would be down to 11,693 to 11,700. And then major level for tomorrow morning, 11,578 to the upside. What'd I do? Oops, sorry, hit the wrong button. It's finally fixed too on TradingView where I can type in a symbol without it bringing up interval. Minor level is 11,807, 11,800, 11,807, and the next major level I'm watching would be on a stronger rally would be 11,920. And then again, everything's going to key off of what we do in Europe for me tomorrow. Russell, you do have a potential double bottom. If we do have a rally play tomorrow, just jump back to the NASDAQ real quick. That's horrible. I'm just looking to see if I missed anything. Nope. The Dow I didn't look at, by the way. No, this is just two bottoms, no double bottom. It's not reversing enough of a move. The Dow's the price action is, I've been avoiding it because it's been so crappy. On a breakdown area, first support is about 30,850, and then major would be 30,700. 31,100 would be my first key resistance, and then 31,3. Let's take a quick look at the DAX. We filled that gap play essentially today. So now it's just a breakdown play below about 12,000. What was today's low? 12,635 is a breakdown play, and I'd be retesting. I'd have the harmonics. I'd be watching for that shorter term close below 12,600. We get the close below there. I'd be watching for a retest of the low from the July 6th around 12,450 and to about 12,364. But crude, we had this big turnaround move. Now we do have a potential double. And even if this trades lower, it's still very key. You want the short-term harmonics are something to watch here from this reverse harmonics move. So the short-term harmonics coming in the 25% right below the low back from the 11th of April. And you have the 200 here. So even on a push lower, unless we really break below here, the double is still in play. Remember, it's potential, but I was watching for that bigger pullback and now a potential bottoming formation, and we'll see if we get it. And by the way, on that bigger, I'm going to reiterate that stuff because we get new people joining all the time. We do have a bigger potential double top here. It's not even confirmed, but I need that to trigger on a weekly closing basis, and you have the 50-week right there. So do that will not trigger for me on a daily basis. It has to be a weekly basis. Notes, I did not get, since the stream started, I was watching for the close above 118.20, like I said this morning. We closed at 118.19 and a half. So no confirmed percent B buy yet. Oh boy, just missing that right there. So no, it's still sit on hands with cycles at the bottom. Now it's going to have to be a potential breakout play, but still watching for that bigger inverse head and shoulders. Dollar index, we start breaking below today's low, watching for the pullback to 106.72. The low today was 107.67. Where else? The Bitcoin rolling back down, testing the bottom area of this channel and back to the 12.5% harmonic. So I'm really watching. It's this key support with cycles getting to the bottom has to hold. Otherwise, I think we'll easily retest these lows. And by the way, the double confirmed but did not trigger on the closing basis. So that's the only thing that would put me short-term bullish. But let me check something. Let me check something where it would invalidate. Now, since we didn't close, I need another push below 18,662, and that would invalidate that potential double bottom. All right. We can look at Tesla though tomorrow morning. There was this little mini double that stalled out at the second target and then came back down. So that ended up right there. And then this other double on the open spiking up, not closing above there on the 15-minute basis, and then the reversal. But Tesla, I didn't even want to see pre-market. The major on the sand for me is this 687. 40 breakdown play tomorrow, and the breakout play would be above 712. Yeah, the Fed doesn't let you trade peacefully. They just like to hear themselves talk at this. Yeah, we saw that Twitter sues Elon. Where would one short potentially for educational purposes only? Thank you for putting that in there. Where would one short potentially? Well, if we start breaking below this key area down around 18,600, I'd start playing it for a short. With a tighter stop, because if you break below these lows, you're going to get another flush down move. I would not be doing it here with cycles at the bottom against key support. It would either have to break down further for me or get another bounce back up. And if it can't even get back to some of these key levels and then rolls over again, that would be another potential shorting opportunity. But this would be shorting into already weakness against key support. So I'd either need that area to break more substantially and then a short-term play to the downside with, keeping tight stops in case this low holds. But then if that low breaks, watch out below. And by the way, I did update some levels on here. Longer term, I'm still watching for that 10K, but I updated the harmonics and everything. So on a break below 17,567, minor 15,715, 13,363, and that's based off this last little push down to this pausing bar low. But then your major harmonic cluster, you have almost a quad harmonic between 10,780 to about 11,943. So that's my next substantial, once we really break this lows, that's my next substantial target. And then if we flush below that, it would get real interesting, because you see the next major harmonic area is not down to 4,700 to 3,600. So let's see. Yeah, I'm going to wrap this up. I know William wanted JP Morgan. JP Morgan with earnings, the key levels I'm still watching, they're still pretty much the same. For earnings plays, to downside is 110.80, to the upside is 118.05. And that's a combination between some significant levels and where the options market's somewhat pricing stuff in. So if we broke below this level, I'd be watching for a retest and a rollover play. You break above this level, which would shock me, because I'm expecting bank earnings to be worse than expected, but you got to trade the probabilities. And the minor breakout level is 116. to the upside. On ES, do we have a potential double top on the daily chart? No, we do not. And I will show you exactly why. Let me pull this off. These are two tops. And I know longer term members, and I'm not picking on you because, Nicholas, I really appreciate you being here. I hope you will consider subscribing to the channel. This is not a double top because you're not reversing enough of a move. So even if we go with the conservative targets, all right, you see what we need are the first and the second targets to be within the candle bodies. Even if you say, let's look at the 4 hour. All right. You don't have any of the targets within the candle bodies. What does that mean? Again, I'm going to clarify this for even longer term. Does that not mean that if it trades below this point that it's a major breakdown move? Yes, it is. But it's not a double top by the way we define the reversal moves. So the probabilities are different, and you can't use the double targets. What would the targets be? Well, that's why I have the harmonics up. So my first target would be about, to lower a stop, would be 37.15. My next target would be 36.89 area. But really, I'd be watching for the end of the clear path move. The end, the technical end is here, right in front of that harmonic. I'm watching for actually more of the candle bodies, about 36.71. So on a breakdown move, it could be lower stop, take something off the table. And then if we break 36.39, then I'd be watching for a break, a quick retest, rollover play, and then that would be another shortable event. And then that would be a substantial shortable event. So that's good spotting. This, I just call this two tops in the same vicinity with the breakdown play here, and there's other ways to front run that breakdown play, but you can see here that's a pretty substantial bottom. Okay, and why? So you had support in that area here, support in that area here, then 1, 2, 3 retests of there. So you break below there, it's definitely a play down here, and you can see that first harmonic area. This is where you like to fine-tune things with different time frame charts. So we're now on the 4 hour chart. We have our harmonics, and look where that lines up. Right at the candle body V reversal, right there, just slightly above it. So that would be definitely an area I would not ignore, right in here, to lower a stop. Why? Because if you get short-term support, now you wouldn't want to lower a stop below this level. Little teaching moment here. Because why? You could easily come down here, break below these lows, get a bounce back up to retest this prior support being resistance, and then the next rollover play. What I see people do way too often is it hits an area here, and they're like, oh, it might reverse. And then they move their stops so much, and they're like, oh, good, I took something off the table. It bounces back here, and then it rolls over, and then you start getting that flush out move. I mean, unless you're trading a 1 minute chart, then that's a different story. So that's a little teaching moment there. Let me get to, then I'm going to have to wrap this up. Would you please take a look at Apple, Microsoft, and HD? Apple. Yep. Let me make these. I gotta change. I'm just gonna change these to a line for that long. That's the longer term massive topping pattern that was triggered. Short term, you had some price rejection here. So here's your play for Apple to the downside. Your break below 143.78. That is a technical double top. 141.90, 140.95, 140.01. So if we get the market rolling over tomorrow, there's your downside play. And then it's also into a daily clear path move. By the way, when you have a clear path move like this, your target is actually this close behind the clear path. 136.70 area for the clear path move. Now it is against the daily rotation zone, so it's a little lower probability because it could come down this first target and catch on that with this prior or resistance becoming support area. But that's the downside play. To the to the upside. This is where it's hanging out right. Oh, sorry, the dogs are going nuts in the background. There isn't a great upside play. I mean, a break above today's high, you're into this stopping area. The overall target would be back to 150, but there's not a strong breakout play there. Microsoft, again, remember, we have the long-term topping pattern. By the way, short-term, here's where you always measure stuff out. Is this a double? First and second targets, no. So this is a breakdown play. Again, if you have a breakdown tomorrow, finally retesting that gap area, what targets would I be using for a breakdown play? First area to lower a stop would be about 250. Why? Because you have a key gap open right there. Level below that for my next area would be 247.65. Why? You have an unfilled gap there. And then on a continued break, if you were going to try to roll this into a bigger play, it would be a retest of those lows. I actually have to revise these longer term harmonics now. Oh, look at that. And overall, just for those newer people, I am still watching for at least Microsoft to return to this 209 area. But look at that next longer term harmonic. 227, 220, 228. That's my next significant target right there. By the way, I'm going to tell you something. We had that double in Home Depot. When you see price action like this is a move up stop for me, even though it just missed that first target, because we're still fighting a longer term trend. So the stop has to be raised from my perspective. When you get this kind of reversal bar and it couldn't close back, it got rejected from the 50. We filled this gap, see here, to this close, spiking just above it, could not even tackle the next gap with a pretty strong reversal and cycles at the top. So that's moving up stop, and now my stop would be on a closing basis below this 275.50 area. Because remember, nothing's 100%. If trading was 100%, then trading would be super easy. Even great patterns are not 100%. And be very wary of anybody who tries to sell you a system that's even in the 90%. Net stalling out. I just want to leave on this first harmonic. So it stalled out this harmonic. We got the little weekly bounce play back to the weekly rotation zone. The only thing that would make me bullish, I'd need a weekly close above about 54.50 on a weekly close. Then I'd be watching for a return into somewhat more of the weekly rotation zone. But now you are trading against this with cycles at the top. So I'd be favoring the downside play. I keep an eye on this little channel bear flag pattern. Okay, but we start breaking below the support base coming in about 43.75. That would put us back below the channel, and here's where I'm coming up with that level. You see this? This is nearly a significant level. Why? Gap down, open, quick reversal, close to that level. Close to that level, retest that level, key close on that level again, double retest that level. So you start breaking below about 43.65. If you wanted to try it intraday, it would be a break and a rollover retest that level. If not, it'd be on a closing basis below that level, and it'd have to be a closing basis. And if you broke below that and then regained that level, I would not be carrying it short overnight or a longer term position because that level technically held. And again, weekly cycles are at the top, looking to roll over. Dailies have rolled over. So that's the key area I'd be watching on Cloud Flare. And then your next minor harmonics would be off the most recent swing. And your next minor target would be 27.27. J.H. Park, does that make sense to you? Hope you're still here. I try to throw in some teaching with this stuff anyways, with how I come up with stuff. If it's too detailed, let me know. Or if it helps, let me know also in the comments. That's the point of this. It's not to make you dependent on me. It's to help you learn stuff. ORMP. Oh, gosh. Nothing I trade. Hey, again, no P to E. So this, where did this play come from? RGRC Investments. Looks like a little pump play, a little pumpy play to me. Right back to that 200 in this prior high area. I'd be watching with this thing for the retracement back down now. Wow. My key support area, you don't, if you're trying to play this short term, you don't want to close back below 680. Close back below 680 statistically favors a return back into this $4 range. So yeah, this looks like this is nothing I trade. And when I see a chart like this, ugh, with no earnings, ugh. Did I miss anything? I don't think I did. You're welcome, Nicholas. Thanks for that feedback, Raj. Okay, we will wrap it up there. And I've been going, no, this is an hour 15 minutes. Long session today. All right. We'll have, again, European or Germany inflation numbers. Could have some movement in the European session. Other than that, everything's keying off of tomorrow at 7:30. I will be on at 8 Central Time. Hope 30 minutes after those numbers. Hopefully, we'll have some good setups then, and we'll get some good price action going for some trading tomorrow. Hopefully, Bob can also join us to give his take on those numbers. Again, if I see a lot of new people here, Raj, you are welcome. Anissa, you are welcome. If you are new here, we're getting close at 5,000 subscribers, and if you would consider subscribing and helping support the channel in that way, it would be really appreciative. It's just a nice number to hit, and the more subscribers we get, the more people join this, and the more people get to learn, and that's the goal. Hey, I'm glad you were still here, J.H. Park. Again, if you're new and you like this stuff, please do consider subscribing. Not today, Coco. We can do that another session. Okay? I'm a long day. So, let me wrap it up here for now. Again, thank you everyone for being here, and I will chat with you tomorrow morning. Hey, Strategy, great. Thanks for typing in. Thank you for saying that, Strategy. Bye for now.